The reason I came to ARK and remain at ARK and like am so inspired by what we're trying to do is because it was evident even when we started in 2014 that this was a unique time in technological economic history.
Starting in the early 2000s, in the tech and telecom bust, there was risk aversion increasing in the market. And then after 08-09, even more so. And so what happened coming out of that? A desire for safety pushed investors and analysts towards their benchmarks. Benchmarks are where they are because of what has happened in the past. The companies at the top are there because of past success. And I felt the traditional world order, represented in large part by these benchmarks, is going to be disrupted.
Kathy came to me and said, well, how would you design research to fit right against portfolio management to take advantage of these disruptive innovations, as we call them, to really think about everything we know about kind of like how to do fundamentals and underwriting for a fund product, and how would you match it up against disruptive innovation?
And I felt there was no one doing the research and investing exclusively in this space. And we wanted to own it. We wanted to own disruptive innovation.
It's almost hard to remember for some people at this point, because back in 2014, ETFs were still almost entirely passive. As we looked at it, Kathy and Brett at their time had really been studying the vehicle, the ETF vehicle. Why couldn't it be used for equities? If it was a better vehicle for clients, if it was more tax efficient, if it was cheaper, if it had transparency, if you could transact through the day, why weren't active strategies utilizing the vehicle? At that point, there were so many questions that we don't talk about anymore. There were fears around whether this would work, whether there would be wide spreads, whether there'd be front running, whether there would be any liquidity, whether there'd be any demand, who wanted it.
Nobody believed us. The market makers didn't believe us. Nobody even understood what we were talking about.
There was a lot of criticism. There were very few people who thought it would work. We sit down at conferences even today with people that we sat in those rooms in 2014 who didn't want to invest, who didn't want to join us, who told us to stop.
We examined the wrapper and we said, why couldn't an active equity ETF be put inside that desirable wrapper? Desirable for the liquidity, the transparency, the tax efficiency, the cost effectiveness. And the answer was, there was no reason. And so we did it.
In some ways, we were living the innovator's journey that we invest our clients' assets on behalf.
It was the application of what our portfolio companies do was applied to essentially how we delivered something to the market. Looking at a problem, the market needs exchange-traded products in this class of assets, and the best way to deliver it was active management. And so we structured the firm in part around that. So delivery of an active product, very unique at its time, and of course, the rest is history. The mutual fund industry will never be the same as a result of the existence of these actively managed products.
After we launched the active ETFs and really tried to push and in some ways create that market, the next thing that really happened of note was in 2015 when our investment team brought forward the concept of digital assets, cryptocurrencies, and specifically Bitcoin. In 2015, most people had never even heard of it, let alone be supportive or bullish of it.
So ARK was one of the first active managers to gain exposure, or maybe public asset managers generally, to gain exposure to Bitcoin through the Grayscale Bitcoin Trust back in 2015 when it was trading at $250. which was one of the very few ways you could get exposure to digital assets at the time. And over the last 10 years, we've seen the avenues kind of continue to open up in what we can invest in and offer to our investors. So that became, in 2021, crypto-linked companies like Coinbase and Square, for example.
And I think that really set up in motion really momentum that, and in some ways took almost a decade then to really reach that next level, which was certainly when the Bitcoin ETF got approved. We understood what the real opportunity was. And so it was a natural fit for us to participate and push and work with regulators and partners to try to get Bitcoin ETFs into the marketplace. And certainly we were right there in that first launch.
One of the things about ARK is that you have to understand that our DNA is not only built upon innovation solves problems as it relates to our investees and how we sort of deliver investable products to the marketplace. We are also very much in tune with our core base, which is the investors that know our products best.
When we were going out in the early days, marketing the ETFs, many people asked us, you sound like these portfolios are the closest to a venture capital portfolio in the public equity markets. And because of the way we looked, many people came to us and said, why is it just because we don't make enough money or we don't have enough net worth, we are prevented from participating in venture capital?
And unfortunately, in the United States, the ability to access that asset class was really determined solely by wealth. Wealth is what kept you in or prevented you from being able to gain exposure. Certainly, once you had wealth, the connections and network were a second layer. As to whether you were getting high-end deals and the concentration of where alpha was being generated. And so it was, in many ways, the least democratized asset class that the world has ever seen. There's something inherently wrong about wealth being the driving factor of accessing one of the best performing asset classes historically. It's really, if you think about it, a tax on the lack of wealth. And so we set out to try to remedy this.
The core issue with private assets, especially at the time that we were researching it, was how do we sort of get a private asset into a product that's unaccredited?
And so Tom went around looking for a way to do that. And he came up with the interval fund structure.
Honestly, I think it's the best venture vehicle in the world. It's the most efficient. People, high net worth individuals tend to want to get a great deal, right? And I think this vehicle that's available to everybody is actually a better deal than what they're getting, which is a funny irony. And it's partly because we're trying to provide it to everybody, just like we try to provide our research to everybody. So publishing our Big Ideas report annually, people tend to bury those market forecasts behind you can pay $10,000 for a market forecast report. By giving away research, by open sourcing our research, which often instead is charged for, it allows us to be more honest brokers of information.
And so we've been extremely proud to bring out the ARK Venture Fund, really focused on that concept of the leading pre-IPO companies, whether those are companies that are massive, that would have been public in a different time and era, or whether those are some of the hidden gems that are less known, but that are quite literally changing the world. And of course, there continues to be evolution and innovation as to the types of exposures and strategies that we can bring to the market.
So I see ARK as a truly global brand. Innovation is borderless. It's about taking innovation global and making sure that investors of all stripes have access to the type of investment products that we deliver to the market.
Globally, we want to ensure that investors have the tools that help them achieve their goals. And as we looked at the different regions, we have been in the Asian and Japanese markets, really dating back to 2016. And the region that we had less exposure and less ability to interact with investors was Europe.
And we got a tip that a company named Rise was for sale. And when I met the leaders of Rise, I knew they had our DNA. We felt, okay, we're a global brand, so let's try this. And it's been amazing. In
acquiring a firm, Rise ETFs, out of London with access and exposure across the European continent, our ARK Europe efforts now are really focused on the same fundamental pillars and beliefs that we've always had since ARK was founded in 2014.
The latest new product opportunity, again, responding to our clients and to an unmet need. Many people say, wow, how can you buy these stocks when they're getting hit because of an earnings report or something? And the courage of our conviction comes from our research, without a doubt. Nonetheless, we know that many investors would like to be exposed to our strategies, but they can't take the volatility.
Technological progress has never stopped in human history. Innovation is undefeated in its ability to change the world. But that creative destruction and disruption over short periods of time can face headwinds. Recognizing that it is critically important to continue to stay invested in innovation while also making sure that investors are meeting their individual goals. We set about to offer a product that would allow all investors, regardless of their risk tolerance and their time horizon, to stay invested. The solution that ARK is really excited to bring to the market is a defined outcome structured product version of ARKK, what we're calling Diet ARK.
Diet stands for Defined Innovation Exposure Term, and it's really a way to get risk-managed exposure to innovation. In developing the Diet suite, the objective was to find the right balance between risk management and growth potential. And so really what we wanted to do was give investors a way to meaningfully participate in that growth potential that technology equities have a history of delivering. And on the downside, what you're getting is a 50% participation on whatever ARKK, the spot product, might deliver over 12 months. So it's a way for an investor who may not have the risk appetite to invest in the underlying ARK Innovation ETF to get access to innovation, but to get access to that innovation in a risk-managed way. The Diet ETF suite is truly unique in that it's a defined outcome product that is tied to an actively managed spot underlying. And most defined outcome ETFs, if you look around today, are actually linked to passive underlyings. It's the S&P 500, or it's the NASDAQ 100, or it's even single assets in many cases. For the first time, what we're bringing to market is a defined outcome structure that's linked, whose performance is linked to an underlying that is an actively managed fund. And that's a true innovation.
We're really excited about the Diet Suite because it's the continued proof of the innovation that ARK tries to bring to the market. This is an exciting continuation of our mission at ARK to ensure that investors have access to the unique strategies of innovation exposure in their portfolios in a way that meets and fits their needs best. So we couldn't be more excited, and we really look forward to continuing the innovation that we strive for here at ARK.